Prakran.
We are live now, Shereen.
They're already live, Prakran.
Gaurav, are we live? Gaurav?
Yes, we are.
Gaurav has to let us go live.
Yes, sir. We are live.
For the benefit of delegates,
Well, thanks very much.
we'll start soon. Yeah.
Thank you for joining us here on the CNBC TV 18 special to mark PAFI's 7th National Forum. Every year, policymakers, corporate leaders and citizens are brought together by PAFI to brainstorm over issues that matter to India. And today, as we grapple with an economic contraction and an uncertain global environment, it is important to discuss the roadmap for recovery and growth, to address the issues of trust and equity that often hold back collaboration of the government and the private sector, to chart out a roadmap for future action to ensure the health of the government and corporate India's balance sheets. Joining me today to talk about some of these issues are Rajiv Kumar, the Vice Chairman of the NITI Aayog, and Uday, the CEO of Kotak Mahindra Bank and the President of the CII. But before I bring these two gentlemen in to talk about some of the issues that I outlined, let me hand it across to Ajay Khanna, who's been spearheading the efforts at PAFI for the last 12 years and has brought together, over 70 speakers this time around, Ajay?
Yeah, 70 speakers over 13 sessions. Yeah.
Go ahead.
Thank you, Shereen. It's an honor to be welcoming Dr. Rajiv Kumar, Vice Chairman of NITI Aayog, and Mr. Uday Kotak, President of CII. Special welcome to Rajiv, who actually has been supporting PAFI from the beginning since we started 12 years ago. Thank you, Rajiv, for all your guidance, support, and help to PAFI. We are eagerly looking forward to your thoughts on the theme of building trust and charting growth. I'd also like to especially welcome Uday, President of CII, another thought leader on the not only financial sector, but on economy, and he's especially joining us from Mumbai today. And of course, Shereen, I always admire her depth of knowledge and, as I say, thinking on the feet. And thanks to her, the session is live now on CNBC TV 18. Shereen, I think the only word I like to say, the corporates needs to engage with society and with various stakeholders, be it politicians, legislators, bureaucrats, media, think tanks, chambers, industry bodies, and all of these are reflected, and all of these are very essence of PAFI, and this is reflected in our program, which is starting now. We have over 2 days, more than 70 speakers from all over the world. Karnataka is the partner state, and we are privileged to have 17 supporting organizations, 27 corporate sponsors. And last but not the least, I'll especially like to thank the Internet and Mobile Association for hosting this. Back to you, Shereen. Thank you so much.
Well, thanks very much, Ajay. And before we kickstart our conversation with Mr. Kotak and Rajiv Kumar, Ishteyaque, a quick word from you as well.
Thank you, Shereen. And let me, at the cost of repeating, let me once again formally welcome all our delegates and the audience of CNBC TV 18 as we go live. for this 7th National Forum for the PAFI. The theme could not have been better and more appropriate, building trust and charting growth. And we could not have had at a better time to have this conversation, as we probably, hopefully, knock on the wood, have the worst behind us as far as the pandemic is concerned. And we look forward as a matter of, with a matter of hope and with a matter of determination that as we go back and rebuild our nation. I think last 6-7 months has seen the best of public affairs professionals display as far as the country is concerned, whether it is to maintain all kind of adequate essential commodity supplies, or the work that the industry has done in this healthcare sector and all other logistics and technology sector. I think this particular fraternity has played an extraordinary role in terms of bridging that trust and bridging that opportunities and servicing the needs of the nation between the government, the civil society, the society that we are all part of, and of course the private sector. So I am eagerly waiting to hear from all of you, and over to you, Shereen. Back to you.
Well, thanks very much. So without further ado, let me hand over the first question to Mr. Rajiv Kumar, Vice Chairman of the NITI Aayog. Mr. Kumar, always a pleasure. Many thanks for joining us here on CNBC TV 18. Let me ask you about what you expect now in terms of recovery. We finally have a number that's been put out by the Reserve Bank, a 9.5% contraction, which has now been corroborated by the government as well. The Finance Ministry believes that that is the number that they're working with also. We heard yesterday from the Economic Affairs Secretary that they are working on the next set of stimulus measures. Given where we find ourselves today, what do you believe the next set of stimulus measures need to be targeted at? What should we focus on? What is your thinking at this point in time?
Hi, Shereen. And before I start, I must congratulate PAFI for this journey of 12 years. They've done an amazing job so far. And I think, as Mr. Amjad said, PF professionals have played a very important role in building the environment where corporates and governments have been able to work together to take care of these very special times and very tough times that we've gone through in the last 6-7 months. So congratulations and all the very best to PAFI, to Ajay, Subho, and Ishteyaque going forward. As always, you've got 3 questions wrapped up into one. So let me try and tackle one at a time. On the growth itself, I've been interacting with some economists, and recently we've had some, and there are some people who now say that it may not be as bad as it's been forecast, and that there are signs that we may have not as bad a contraction of 9.5, 10 double-digit contraction that we've thought about, and the reasons are that the recovery in August and September seems to have been quite smart and across many sort of high-frequency indicators. And we now in NITI do our sort of now forecasting at the moment, and if you look at several things, and I think one of the best, let's say for example, I'm not going to talk about tractor sales or fertilizer sales, which are already up, and steel and power. But the PMI, the Purchasing Power Management, PMI index is up at 54% for composite and up at 56.8% for manufacturing, and even for services, which you would know has been one of the worst hit sector. It's close to 50 now, and it was 5.4 in April. It was 5.4, and it's come up to 49.8% now. But I mean, even the sort of the Apple Mobility Index. You see now that it's come up to 104 from 16.8. That's for passengers, for drivers, and but okay, for transit it's still lower. But all of these things are showing, and as somebody else said recently, that the recovery is broad-based now. It's also quite smart and much sharper. And again, the railway freight figures are there, and and so on. So I think maybe what you will see is that by the time we are now in the third quarter, that this third quarter will see a smaller contraction than had been forecast. People had said -5%, and the fourth quarter could well be a wash, if not a small positive. So if that be true, then I think we might end up with a contraction which is lower. But nonetheless, a contraction, which itself is something of very, it's an unprecedented thing for a very long time. On that, therefore, I'm happy to see Tarun Bajaj talking about the next stimulus, and we in NITI have been talking about the fact that this stimulus should be focused on infrastructure, which has short gestation periods, in which where you can get things off the ground and money out of the door as quickly as you can, because that has its own very strong multiplier effects. And what you want really at the moment is not something which is just a once-off. So helicopter money is not what you're looking for, but you're looking for stimulus which can sustain growth and give legs to the recovery that we're seeing already. And I'm hoping that the Ministry of Finance will be focused in the same direction. We could go into the details later, but that's the broad sort of trend that I see.
Okay, let me get you to then give us some details, because you said that you're happy and you welcome the fact that the Ministry of Finance is looking at the next set of stimulus measures. You would like the government to focus on measures that involve infrastructure projects with a short gestation period. Can you give me specifics on what these infrastructure projects are likely to be? Because no infrastructure project in this country is a short gestation infrastructure project. So what specifically has the NITI recommended to the Ministry of Finance?
Well, I'm afraid I can't let you be privy to what we have recommended, but I mean, just as an example, a very broad example about something that can have short gestation period is for example, improving, let's say, the state of our railway stations or platforms, which improve things, which doesn't take very long. You've got plans. I know that, for example, Hafiz contractor has a very detailed workout. I mean, he gave us a 99-slide, PPT with sites chosen, etc., where you can have slum rehabilitation, and which can become a major driver of economic activity, because as you can see, the real estate sector has huge multipliers and so on. I mean, I can actually go on, but I don't think it's worthy of our audience's time to get into those details. But I can assure you that there are enough infrastructure, let me not call them, there are enough productivity enhancing expenditure that we can do, which can be rolled out in a relatively short time and doesn't necessarily have to take as long as we think it does. Plus, this is where this government strength can come into play, which is much better monitoring, real-time, sort of overseeing the data and implementation, whereby things can be improved much faster.
Okay, so productivity enhancing projects that you believe or hope is going to be the focus of the next set of stimulus measures that the government is expected to announce. Our colleagues suggest that we could expect those announcements to come in within the next 30 days or so. Mr. Kotak, let me start by asking you about your take on where things currently stand as far as the economy is concerned. Mr. Kumar believes that things are not as bad as was expected. What's your own forecast in terms of where we stand, as well as the strength of the current recovery that we're seeing?
Thank you, Shereen. And first of all, congratulations to PAFI on this 12th meeting. And I'm also delighted to be on this panel along with Dr. Rajiv Kumar. And of course, delighted to be back with you on CNBC TV 18. As I look at it, there are two important aspects we need to keep in mind. Number one, compared to April and May, the situation in October, in terms of the real economy, especially in tradables and physical areas, have certainly got much better. And I think about it as 5 important factors which are working for us as a country at this point of time. Number one is an extremely strong external account position. Compared to the past, including 2013, we started in this situation with more than $500 billion of surpluses, and now it's gone up further to over $550 billion. So a strong external account, including the current account position, which is giving us much less fragility on the global side. Second, huge amount of surplus liquidity around the world is leading to significant investment flows. And the beauty about low interest rates is it suddenly makes unviable businesses and projects look more viable because the hurdle rates drop sharply. So that's the second thing which is happening. And when people say, oh, stock markets are disconnected with the economy, my counter is keep in mind that the earlier hurdle rate of return which the investor was looking at has significantly dropped. And that is certainly lifting all the boats. Third is even in India, I think we have had an extraordinary accommodative monetary policy with clear guidance and unambiguous way forward. I think that's extremely important for a sustained recovery to come out of this pandemic, one of its kind in our lives. Fourth, an expansive fiscal policy, including the packages, combined with the fact that the revenues have been lower. So you are currently at an expansionary fiscal policy on a center plus states, somewhere 12% plus. And five, the world has changed. The world is moving away from concentration with dominant countries in a new geopolitical framework. And the key words today are diversification of facilities and resilience. That is what countries are talking about. And geopolitics and a new world order is also going to help India in the future. So these five factors are making a significant difference. However, I completely share Prime Minister Modi's views. We need to be extremely alert. This time around, the problem is not economics. The problem is science. And we must not lower our guard or get complacent, including the economic field.
Okay, so we must not let our guard when it comes to the problem and the crisis that we currently continue to deal with, which is COVID. But let me ask you about future action. You talked about what's working for India and the five factors that you listed out. But what is the expectation now from industry for government? We're talking about the context of the next set of stimulus measures. What is it that industry hopes for now, Mr. Kotak?
I think, Shereen, again, the few areas which we need to focus on, I completely agree with Rajiv. Infrastructure is a critical part and never miss a crisis. We must use the crisis to our advantage. But in addition to infrastructure, I would strongly urge a focus on healthcare, education, and sustainability. These are medium-term measures. India is one of the lowest spenders on healthcare, 1.3% of GDP. Countries like Germany and US spend 10% or more. Even China is nearly more than double of India's spend on a larger GDP. Time has come for us to be investing in the medium term as we go forward. And that has to be the critical priority for us to take this next gen of reforms. I also support the reforms in the areas like agriculture, which have happened, the fiscal package, which is happened. And amongst the various packages which have actually come out, the one which has worked beautifully is the MSME package with the government guarantee. It has been used to the extent of about 1.5 to 1.75 lakh crores. We must find ways and means to use the full 3 lakh crores guarantee of the government, and the balance part may be used for other sectors, including infrastructure or even the stressed sectors.
Okay, that's interesting. So you're saying that the MSME package has worked well, and whatever is left within that could perhaps be used for other sectors. But let me address the number one priority that you raised there in terms of future course of action, and that is the need to up healthcare spending. Before we address the healthcare spending in the medium to long term, Mr. Rajiv Kumar, let me ask you about the spends that will be required when it comes to vaccine. This is a hotly debated issue today with the BJP promising free vaccination for the state of Bihar, other state governments coming in. NITI, of course, has been working with the government on trying to design and develop the vaccine delivery plan, which is, of course, going to be driven by the center. What is it going to cost? Because this is also going to be a stimulus in a way. So how much has been factored in as far as the cost of vaccination is concerned? As and when we do have a vaccine, the government is hoping that Q1 of next year, there should be one.
Shereen, I think it's very premature at the moment to talk about costs and
You're absolutely right, sir, and I understand that this is premature because we don't know whether, what the cost of the vaccine is going to be. So far, only one vaccine manufacturer, which is Serum Institute, has come forward publicly with a price for its vaccine at $3 per dose, and it's expected to be a 2-dose vaccine. But, there was a number put out by Serum Institute CEO Adar Poonawalla suggesting that it could perhaps even cost to the tune of 80,000 crore rupees in the first year itself, if we were to talk about vaccinating the country. There must be some estimate that the government has worked with in terms of resources.
These are very big numbers spread over a long period of time. So if you give out these numbers, they scare you. But the point is that you have to break it down in terms of per month, and whether it's going to start this fiscal or the next fiscal, etc. So I think congratulations to Mr. Poonawalla to have put out that number. But the fact is that this depends on so many variables that I think, again, to repeat myself with due respect to you, it is a bit premature. It is, I think, much more important to focus on getting it right, getting the mechanism right, and getting the mechanism in place, so that, as I said, you get unique IDs, you get portable IDs, you get universal coverage, you're able to prioritize, and you're able to use technology to the best extent possible to make sure that you are able to vaccinate. By the way, the other good news is that Serum Institute is not the only game in town. Right. There are others, and therefore there will be competition. And I'm sure the corporate world will also rise up to the occasion and make it a part of their CSR activity and not charge a profit for that.
Yes, we will have to see how many vaccine manufacturers will in fact have a product out. And you're absolutely right, sir. It is not a simplistic issue. It's a complex issue. But the reason I'm raising it is because of what we're seeing happen today with state governments now getting into a race on offering free vaccines to citizens. But let me move to Mr. Kotak. And Mr. Kotak, let's address the issue as far as the banking and financial services system is concerned, sir. Since you believe that the recovery at this point in time has legs, that perhaps, as Mr. Kumar pointed out, things are not as bad as one anticipated at the start of the pandemic in March. What's the expectation then as far as NPAs are concerned? Do you believe that the fear that we could be faced with an avalanche of NPAs is probably also overdone? Given the expectations and the situation on the ground today, what's your take?
Okay, first, Shereen, the position on stress at this stage looks better than what it looked in April and May, undoubtedly. However, on the NPA picture for the financial sector, there are three variables which have come at the same time. Number one, we've had two moratoriums, 1 and 2. So that has delayed the recognition of NPA. Second, there is a Supreme Court judgment currently staying recognition of NPAs as we talk. And third, there is a restructuring program which has been announced by the RBI, and based on Common Committee, the banks are free to do restructuring, including restructuring for a period of up to 2 years in terms of postponing of payments. Therefore, to get a correct picture on stress is a challenge which requires a physicist and a mathematician working together to really figure out what is the true pain in the system. However, what I would say that directionally things are looking better than what they were, and the sectors which continue to do well have increased. I would still be worried about pockets where we need to be more cautious, and in particular the unsecured urban consumer, I think, is still vulnerable, and we need to be careful about that sector.
Okay, unsecured urban consumer. So you do see the retail loan book as being the more vulnerable this time around?
Even within retail, if there is an appropriate and an adequate security, I think the ability for a lender to recover a reasonable amount is better. But where the exposure is retail and unsecured, there will be more pain than secured retail. And in general, the corporate sector has done better in the last couple of quarters. However, I would say it is still early to declare victory because we need to watch out at least for the next 2 quarters.
Okay, still early to declare victory. We need to watch out for the next 2 quarters. That's the headline coming in there from Uday Kotak when it comes to NPAs. Mr. Kumar, if I could pick up on the point that was made by Mr. Kotak and link it to what he said, is that we must always use the crisis as an opportunity. The government has made it very clear that it intends to move ahead with several reforms across a whole bunch of different sectors. We've already seen the decisions that have come in as far as agriculture is concerned. What next, as far as the banks are concerned? One has been hearing about the NITI suggesting to the government as far as privatization of banks are concerned. What is your take there? Do you believe that this is the opportunity to move ahead with that?
The government has demonstrated that it's not going to miss this opportunity. You talked only about the agricultural reform, but the labor reforms are another very big one which has been hanging fire for a very long time. That's been completed, that's been done, and the states are now required to do that. But let me come directly to the financial sector, because that, to me, the fact that India has a private credit to GDP ratio of about 53%, while our peers like China and Korea and Vietnam have this more than 130, more than 140%, does show that there is a weakness in access to credit. There's not even as much the rate, although the rates themselves are matter that when you have the GSEC rates at 1 year at 3.6% and the 10-year at 5.4, I can't see why the average weighted lending rate on fresh loans is still at 9.2% for all scheduled commercial banks. The rates do matter, but it's the access to credit which is of the big thing. And there, let me sort of in some sense echo what Governor Shaktikant Das said, I think yesterday, reported today, that it's much more a matter of governance and much more a matter of competition in the financial sector. What we need to do is to bring about much greater competition in the banking sector, because I think we are a very underbanked economy at the moment. And that is why I gave you and if you look at the credit flows over the last, export credit is, it just became positive, but was negative 40%, until very recently, it still is only 5%. The credit to SMEs, MSMEs is 3.6%, which in real terms means that it is a negative flow of credit to that sector. Same story with infrastructure and so on. And I've looked at civil data to show that the credit inquiries, even during this period, far outspace the credit sanction that you've got at the moment. So the question is that the promise, we must live up to our promise of on tap licenses, give up and do whatever is required. And I'm not going to be able to go into the details of this, to increase the real competition, so that my friend Uday has something to sort of to compete about. At the moment he's sitting so pretty, and Kotak is sitting so pretty, and so is the HDFCs. Because simply our private sector banks aren't getting the run for their money.
Okay.
What we need to do, and I'm sure he will agree, that if we improve that structure, if we improve that marketing structure, which was also the recommendation of the PG Knight committee, and the governance, I think that's what we want to do. And the financial and the banking sector are still one where this opportunity could well be used to good effect.
I know you won't discuss contours or specifics, Mr. Kumar, but let me ask you, what is the prescription then for this greater competition that you speak of? You said that Uday Kotak should be given a run for his money. Should that be done by putting together public sector banks to have large public sector banks take on the likes of Kotak and HDFC? What's the prescription for this greater competition?
I would leave it to Uday. He's the past master of this. He's there. He's in the sector. I would love to hear his views on what he thinks he would like to see as good competition.
Mr. Kotak, you want to take that answer? So greater competition, says Rajiv Kumar. You're sitting too pretty. You need to be.
I must first thank Rajiv for giving me a position which, for relative size, we at Kotak do not deserve. We are at 2 to 3% of the market. Total banking sector market, Kotak is barely 2 to 3%. Therefore, even now, the elephant in the room, where I think we really need to find ways of giving competition, including how we think about it, is the 65%, even today, is the public sector. Therefore, I am truly honored by Rajiv for giving me the position as a 2 to 3% market share player of the 100% of the deposit and the loan market. So Rajiv, appreciate that. But what I would want to add is to say that the issue about competition in the banking sector, we have to keep one thing in mind. Compared to any other sector, this is, as Governor Das also mentioned, this is a sector about risk management. Finally, it is depositors' money. It is other people's money. And when we lend, we have a responsibility to ensure that at no stage is the saver's money at risk. And unlike the state, we as players in the private sector do not have the ability to go to the state and ask for more capital, which is a challenge for us. Therefore, we have the discipline of the marketplace, which we have to respect. Otherwise, Shereen, Bhan and her team will put sells and shorts on our stocks, and then we will not be able to raise capital because we have done poor risk management. Therefore, I respect the point which you are saying. We certainly need to tighten and get better. And I do agree that we need to tighten the quality of risk management, the cultural aspect of governance, where we are managing other people's money at a leverage ratio of 9, 10, 12 times our capital. We have seen the challenges which depositors have faced with many financial institutions in the recent times, as also savers and investors, both in banks and NBFCs. Therefore, I would completely agree with Rajiv Kumar. We certainly need more competition, but we also need to ensure that it is at cutting edge governance, risk management, and quality of conduct of financial institutions, which truly protects and builds trust. The subject of today's conference is building trust. The banks have to really build trust and nurture it over long periods of time.
Yes, they do have to build trust and nurture that. But, to your point, sir, about Kotak having a 3% market share, and Mr. Kumar suggesting that that you're sitting pretty and you need to be given a run for your money. But let's talk about the road ahead as far as private banking is concerned. In terms of market share gains, given where we find the PSBs today at 65%, do you believe in the next few years, next 5 to 10 years, we could see that skew changing significantly in favor of the private sector banks? Will you go up as an industry from 30% odd to maybe closer to 50%? By when?
So first of all, I must compliment Rajiv and his team, as also the government of India, for thinking about larger public sector banks. Therefore, the mergers which have been done have a purpose, which is we need to create stronger, larger public sector banks. And frankly, few large public sector banks should be a core part of the Indian banking system. If we are 12 or today, do we need 4, 5, 6 public sector banks, large and competitive? My answer is a categorical yes. But we must find answers for the balance 5 or 6 in the public sector banks in terms of how we are thinking about the roadmap ahead. I would also agree that as far as private sector is concerned, it must take more of the load. And if in the medium term, I on this fully support Rajiv Kumar, if we get to a balance of say around a 50-50, that's not a bad place to be in terms of building the financial sector. And I support Rajiv that if Indian economy has to take off, the financial sector must have the capacity and the ability to support economic growth.
Yes, Mr. Kumar, before we move on, let me get a final word from you in on this particular issue. To Mr. Kotak's point that yes, we do require 4 to 5 large public sector banks. We've already seen, a merger with the SBI and SBI subsidiaries taking place. Now, I know that this is something that has been spoken of for a very long time. It's been discussed as well. Do you believe that we're moving anywhere closer to taking the next steps on this journey?
Well, I mean, the journey started, and which is a very big thing to do, because the biggest inertia you have is at the beginning of a journey. So we have overcome that inertia. But I mean, by the way, I told you that you will get the best answer from Uday on the financial sector, and that's what you got. But look, our largest sector, the bank, SBI, 27% of the total industry assets, is 52nd in the world. In terms of ranking into items of size. And given the fact that we are the 5th largest economy today in the world, and wanting to be the 2nd and 3rd, this simply is not sustainable. So we need to, and we really should be thinking in terms of magnitudes in the size of where our banking sector is. Also, we need specialized banking. I was a member of the EU Commission on banking sector some time ago after the 2008 crisis, which was led by Avinash Prasad, and we at that time said that maybe the time has come to rethink the whole model of banking, financial sector supermars, and you need specialized banks, because that's what can bring you the expertise. What Uday talked about, risk management capabilities. I mean, that risk management capability to be spread across a continental size economy, as diversified as ours, for every bank, I think it's just simply a non-starter. And I think some of the private sector banks have done much better because they've specialized on some categories of loans and have become much. So that's probably what we need. So we need size, we need specialization, we need risk management capabilities, and we need competition. So so the contours are very clear. Now, how and when is the nitty-gritty issue, which I'm sure the Governor Das and the Secretary DEA and Secretary DFS are grappling with and are discussing it with the industry itself as to how and when can we complete the journey.
Yes, I would imagine that that this is something that the government is looking at, but we will have to wait to hear on the next steps. But Mr. Kumar, something that the NITI Aayog has pushed for several years now, and the expectation is that shortly the new policy for strategic disinvestment will be taken to cabinet for its approval. how confident do you feel that we will move towards privatization? Because you have drawn up many lists, many have even got approval of the cabinet, but it hasn't yet taken off. Do you believe that with the approval for the new strategic disinvestment policy coming in shortly, as we're given to understand, this will finally take off?
We keep trying, and we assure you that we'll keep trying. Let me just end it there.
That's all you're going to say?
Yeah, because it depends on so many factors, so many things, and it actually is, so I think that's the best I can make at this point of time, because as you said yourself, there is a list which has been approved by the cabinet. So the political decision has been taken. The political risk has been taken. And yet we find that this is not, it's not easy to implement that. So therefore you can imagine that there are factors which go beyond, as it were, the political will, and those have to be tackled. I mean, that's our reality. That's that's our complex reality, which we should never try and simplify. And I've noticed in my last 3 years that India is we are a very unique economic system. Given our size, given our diversity, given our plurality, given our democracy, given our variety of our stakeholders, so we have to work on the basis of best effort. In the exam times, you remember that you got 8 marks out of 10 for method and 2 for your answers. So I think that's what we should be doing. Give us marks for method.
Okay, Mr. Kotak, to the point that Mr. Kumar is making, and this takes me back to many conversations that one has had with the former finance minister, the late Mr. Jaitley, and he would always say that reform in India is the art of doing what is possible. Every year around the budget time, there's a lot of expectation on monetization, privatization, and so on and so forth. What's the realistic expectation now within India on this issue, sir?
My personal take from a point of view as an Indian citizen is we are at a point of time when change is something which we should be considering seriously. And let us move forward and build the destiny of India over the next 3, 5, 10 years. And COVID has created its challenges, but also has created opportunities to be thinking out of the box. And I would strongly recommend and be fully supportive along with the government to come out and let us together be more uncharted in our vision for a future. Let us be bold to an extent on the economic front.
I'm going to pause you here and go back again to a conversation with the late Mr. Jaitley. And he said that whenever I ask industry, what is this bold reform that you want? It's the same set of things that they come up with. So since you're talking about uncharted, bold measures that you expect or hope from the government, what is it that you would like the government to prioritize? They've already taken some steps. What next, sir?
I think clearly we need to be safe. I mean, there are many areas, and I think Shereen, we can have one full session on this. But the key issues are, what are we doing out of the box to take care of our structural fiscal challenges? We have many areas to increase our fiscal spend. For example, India needs to dramatically increase its spend on defense. India needs to dramatically increase its spend, as we have discussed, on healthcare, infrastructure, education, sustainability. And how are we going to think out of the box for the resources for this? There is massive amount of land, gold, assets which belong to India, Indians, and the state. What are the out of the box things which we can think about on the economic front? And the time, I think, is bold and now.
Okay, Mr. Kumar, let me put that across to you. Bold ideas to mobilize resources. What do you believe is possible today? And I'll also ask you this in the context of the fact that, Mr. N.K. Singh of the 15th Finance Commission did say that over the next 2 years, there is a sort of fiscal forbearance that we can live with. But post that, there should be a return to the path of fiscal consolidation, something that was echoed by the governor last night as well. So given the fiscal constraints, the fiscal challenges, as well as the the spending needs that Mr. Kotak spoke about, where do we mobilize the resources from?
Shereen, I must draw your attention, the audience's attention, to the work that is coming out under the broad umbrella called the new monetary policy. And where you talk about the fact that as long as you can borrow at rates which are lower than the rate at which you can grow, the fiscal space doesn't matter, because that's the equation. And as long as you can borrow, therefore, domestically and not borrow abroad, so that your external, external sector is well taken care of. And Japan is a classical example. The 220% debt to GDP ratio, it's never faced a sort of fiscal crisis, but that's what to do. And I think this is where you need, I completely agree with Uday that you not need to think out of the box. But I mean, I think these are some completely old, outdated notions of saying that 3.8% of fiscal deficit is related directly to inflation. I've asked experts, and I don't want to name them, to give me a full equation and to show me the relationship between inflation and this fiscal deficit. It's not there. But the point is that the new monetary theory tells you today that as long as your denominator can grow faster than your numerator, then borrowing, the level of borrowing is not so important. If you go today from 68% to 80% tomorrow, not a problem, as long as, I again repeat, you can use that to enhance your productivity and to make sure that your rate of growth goes up. Having said that, I think I should also add to the fact that we borrow at the national level and not at the subnational at all. I think here it's not very fashionable to talk about China these days, but they say that you can see from there that they're borrowing at the quasi-national level by the provincial governments, entities, by the local entities, by the regional, etc., by the municipal corporations, doesn't add to your national debt and therefore doesn't affect your credit rating. So that today I think China's debt to GDP ratio is again, is massive. It's about twice as well, and no skin of the nose on any creditors, any credit rating agencies. But for that, what you need to do is to replicate the Indore and the Pune of this country 10 times over, 50 times over. If you can get those, city government, city balance sheets, there is enough money in this country. There's enough liquidity in the world where there is about what, 13 trillion, I forget, some enormous amount of trillions of dollars going around. It's earning 0% interest rate. It's all available for viable projects. And India can offer the best viable projects and the speed at which to absorb them. And I think, therefore, what you need today is one, a shelf of viable projects, a capability for risk management, and two, to be able to think differently as to how you can, what sort of entities you can put up which can raise funds to generate growth and enhance productivity, which you can. And I gave only one example of subnational borrowing by municipal, by urban local bodies, if you like. Right. It can happen quite easily.
Yes, you gave the example of the municipal bonds. Mr. Kotak, let's talk about fund flows, because you talked about the surplus liquidity that's sloshing around globally. What do you believe is the outlook as far as FDI is concerned? What do you believe is the outlook for FII? And of course, for these long gestation infrastructure projects, private equity continues to be fairly strong here in India. Capital continues to come in. What's the outlook in terms of fund flows for India?
Shereen, I have always believed that the best time to invest in India is when things look challenging. Therefore, in the backdrop of a significant growth slowdown, my view is this is a great time to be investing in some key sectors of the Indian economy. And we have seen significant flows come in the last few quarters. And I therefore believe that global investors are very open to putting money in India and are essentially looking at stable, consistent, predictable policies over a long period of time. And if we can deliver that, there is a massive flow of relatively low hurdle rate money available in the world. Having said that, we will be subject to huge volatility because of what happens in a China or a US has an implication in India. As the joke goes, that if somebody in the US sneezes, the rest of the world catches a cold. So we have always got to be careful about that and therefore build simultaneously domestic resilience while we get global flows. And therefore, a counter to being able to encourage a lot more global FDI and FPI is also the ability to domestically be resilient and strong should the volatility come into the global flows. And that is the key for our future.
Mr. Kotak, we have spoken about this for long, sir, the need to unlock domestic pools of capital. And while we have seen some of that happen, it is nowhere close to being able to take on, forget replacing, should there be extreme volatility, foreign flows. So what more can be done to unlock domestic pools of capital?
Shereen, it's a situation over a long period of time. An average Indian saver, you go back to 70s, 80s, 90s, and even in early 2000s, was given a perspective that equity is risky. Therefore, there is a natural aversion to risk capital amongst domestic Indian savers. For the future of our country, the core is domestic risk-taking appetite. And therefore, there is an enormous amount of money and savings which goes into gold, which goes into deposits, which goes into relatively perceived risk-free assets, national saving schemes of the government. And it is here that if we want more risk capital, we will have to balance it with what Rajiv talked about, the need for government to borrow a lot of money. How do we create domestic pools of risk capital available for building India and as a ability to produce, number one, superior returns? We should avoid crowding out for these pools of capital and at the same time encourage global pools with a confidence that we are not dependent disproportionately on global pools, which is happening in many, many segments of the Indian economy today. And I will give you the example of private sector banking, which Rajiv referred to. Out of the 5 top so-called Indian private sector banks, 4 out of the 5 Indian private sector banks have majority foreign ownership. I am not against foreign ownership, but if we want to build an Atmanirbhar Bharat, we must have the ability of domestic pools of capital, and there are plenty of them. And therefore, policy has to encourage risk capital versus safe debt capital and avoid crowding out.
Mr. Kumar, let me take that straight across to you. And I think that's a very passionate plea being made there by Uday Kotak on behalf of India Inc., the need for risk capital, sir, and what the government can do to facilitate more of it.
Well, I think I heard him say that this is a long-term game, and I heard him say that there is no shortcuts to it. Domestic risk capital would come out of household savings essentially, and household savings would go up as incomes go up, also at the same time as incomes go up. But I think here what we need to look at along with this are large swaths of assets in the private and in the public sector, which are today in some sense earning much below their potential, and in monetizing them. And gold is a great example. 25,000 tons of gold in this country, which is just lying in people's vaults and tijoris and is not being used. And I think that's something, and therefore I know that the Department of Economic Affairs has been at it. NITI Aayog, we've also been working at it as to how do we monetize this gold. I mean, I forget, because it's such an enormous amount, the value of this gold stock in this country, and even about 10-20% of it could come, into the thing, Shereen, is to remember is that our private economy in this country is always a very nicely surplus economy, and that surplus, only 3%. It was 3 and now maybe 5% of household savings come into the financial sector, because now that can be increased, that can be improved. So the transformation of physical savings to financial savings will improve this pool of domestic risk capital, and those are the steps that we need to take. But here again, if you give the savers 3% on their deposits, while we have to charge 9.2% on average lending rates, and the incentive for people to convert their savings into financial savings is very weak. So what you need to do is to improve the efficiency of the banking sector, so the NIMs come down, the sort of levels. And, and again, I mean, we are going well into the nitty-gritty of it, but I completely agree with Uday that there is a huge potential for mobilizing more financial domestic savings. Because those savings are there, but to convert them into financial savings, and I think that can happen if we again the same fourfold criteria for the financial sector. If we go down that road, I think we can achieve it.
Sure. We're pretty much coming to the end of our conversation. Shrishti Vajpayee sent in a question, Mr. Kotak. I'm going to get you to answer that. In the times of COVID, digital, including e-commerce, education, virtual meetings have seen a big surge. Do you believe that this is going to be the strongest medium for recovery and further growth? Is this the space to invest in, Mr. Kotak?
Completely, but make sure that the business models have some visibility at the end of the tunnel. I mean, it may be over time, but I certainly believe that COVID has transformed the world, and digital, e-commerce, consumers, technology, pharmaceuticals are some of the sectors which will continue to do extremely well in a post-COVID world. And I would be investing in those sectors with a medium-term perspective.
You will be investing in those sectors with a medium-term perspective. Since this also was a session where we talked about trust and governance, Mr. Kotak, I need to ask you about what you make of the Reserve Bank's proposal to cap the tenure of CEOs of private sector banks. Yesterday, Aditya Puri told us that two of the best-run banks in India, HDFC and Kotak Mahindra Bank, have CEOs who should be there, people like you who deserve to be there. And why should you cap the tenures? Your take on that?
Shereen, I think that's a question you should ask the regulator rather than me. As far as the way the situation I look at today, it is still a discussion paper. It is still not a regulation in the law, and we will wait for it and see what happens in the future.
If it were to come through?
I'm not a believer in doing risk management on ifs and buts.
Okay. Mr. Kumar, I'll give you the final say, sir. What to your mind is the expectation now in terms of the sequencing of the next step of measures we should expect?
Shereen, if I may dodge your question and answer something which I wanted to say, which is about building trust. And there I think, the 80% of action now has shifted to the states. And I think the building of the trust must shift also from Delhi and Mumbai to the states, because I think that is where a lot of trust building is required, between the private sector and the governments, and the government establishments. So, it's critical that we do that, because unless we do that, the real, we will not take off at the level we want to, because each state of ours is big enough, is a mid-sized country. So my request to PAFI is that they should have now state-level conventions, where they can bring state and players both in India and the government together. Because building trust, by the way, is going to be the key going forward. So the world out there is a very very nasty world. It is not waiting for us to with open arms. We have to compete with them, and we can compete with them by building this trust and by depositing our trust in those who've already invested in India. Because I mean that's where it is actually. I think unless we do that, I'm not sure that we are going to get our targets, and we're not going to meet our aspirations, which we must.
You're absolutely right in pointing out that there is a need to bridge the trust deficit that exists between the center and the states, and ensure that we act in a much more cohesive and coordinated fashion. Mr. Rajiv Kumar, Uday Kotak, always a pleasure. Appreciate you joining us here to take us through your ideas and the roadmap ahead as far as recovery and growth is concerned. Appreciate your time here on CNBC TV 18. Well, before we close, may I invite Subho, the Vice President of PAFI, for his vote of thanks.
Thank you, Shereen. I will take probably one whole month to understand the full significance of the conversation that we just had. In the meantime, I can tell you that I and all the delegates are personally feeling very assured after listening to Dr. Kumar. And we will also start valuing depth and clarity of thought after listening to Mr. Kumar. And with you around, always we can learn how to become a perfect moderator. So thank you very much. We will close this session now on time and we'll move on to the next session. Please stay with us, viewers. Thank you very much.
Thank you.
Thank you. Bye.
Thank you. Thank you. Bye.
Thank you. Thank you, Mr.